Hey everybody, good morning. Happy Sunday, fun day. This is Trendy John from Simpler Trading. We are going to go ahead and start this week's broad market analysis. We'll be covering from the 8th of June into Friday the 13th. We'll be looking at things like this week's major U.S. economic reports and Fed speakers. We'll look at the SPY, the Qs, ES futures, NASDAQ futures, the dollar, the TNX, all the good things that really come together and really produce this overall broad market analysis. Now, I've been doing this a very long time, and honestly, I'd be lost without it. I feel like it is definitely my pulse that I need in order to understand what's going on. Like, for example, last week we talked about the major level, which is called the upper yearly trendy edge. And what we find is if we can get up and over this level, we should see an all-time high very soon, very, very soon. And the probabilities of a move of 88.7% up into the all-time high has a probability. Now, disclaimer, this is not financial advice, but just from my back testing that I see, we have a 95% probability that we will move to an all-time high. Now, listen, this is the key. Timing is the variable. Okay, timing is the variable. And I'm going to talk about that, so please stay tuned. Before we move on, go ahead and hit the like button and hey, listen, if you have any comments or anything to share about your experiences at Simpler Trading here in the Trendy Room with Melissa and I, please drop those. We really, really appreciate your support and thank you so much for taking the time to listen to this. Again, don't forget you can turn up the speed. I like to listen to YouTube videos at about 1.25 to 1.5, depending on, what I can digest that day, but I like to listen to it a little bit faster so you guys don't have to sit here and spend 30 to 40 minutes listening to some of these sessions. Just speed them up, okay? Let's get started with this week's major US economic reports and Fed speakers. Remember, guys, hit the like button, all right? But also remember, this is so important right here. This is just catalysts that push price to our levels where we want to buy and or go short, or maybe you just want to like sit and hold tight, right? So just know that. So when I talk about these, I'm not exactly sure if the market's going to move big, but a lot of times it definitely causes volatility. So starting on tomorrow, Monday, June 9th, we have wholesale inventories that are coming in. These are Eastern time, by the way. Tuesday, we have NFIB Optimism Index. Wednesday, this is where it starts to look a little bit more interesting. Consumer Price Index, CPI year over year, core CPI, monthly US federal budget. And then coming in on Thursday, initial jobless claims, producer price index, core PPI, PPI year over year, and core PPI year over year. And then Friday, ending here with consumer sentiment. Now, again, having a little bit of time in this chair and seeing this stuff over and over, the market tends to give you a lot of patterns that you recognize. Usually, when we're coming off a really bullish week, which I thought last week it was pretty slow, but we broke out of a 3 week consolidation and made a new high, is really good news. And I am bullish going into this week, but again, there's a thin line, and again, I'll get to that. But when we're coming off of a nice trend, and I'm feeling bullish, usually when the Monday and Tuesdays don't have a lot going on, what I typically see is some sort of slow melt up into a level. Okay. And then we just kind of digest and get ready for Wednesday and Thursday. That's what I'm looking at here. Now, again, this doesn't take into account any of the craziness that's going on X and those kind of things. So, you guys know a tweet bomb can come from left or right and really, like, throw things for a loop and cause some major volatility. So I can't predict those, but again, that's when it all comes down to risk and understanding your plan before you take a trade. Let's go ahead and move on into the next portion of this week's BMA, and that's going to be earnings. Okay. And I'm actually going to pull down the room here so you guys can see. We're going to come over here, and all this stuff is going to be in your notes section. So if we just come over to BMA, you can just scroll down here, and all these charts are going to be here for you. All right. So Earning Whispers has some names on here that you may be interested in for this week. I like to trade debit spreads into earnings a lot of times. Every once in a while, I'll go straight up if I have some sort of hedge. I also like to really pay attention to this because of the, there's this well, I have a lot of leap positions, and if I'm in a leap position, I do want to know when they are reporting, and I'll come in here, I'll take a look at levels, and I may decide to hedge myself with some sort of put debits and things like that, okay? So we're just going to scan this together really quick, see if there's any names on here that we find interesting. And honestly, when I'm looking on here, I'm not that excited, but let's go down Monday. There's just a few names. Nothing's really sticking out here. Um, Tuesday, not much going on there as well. Wednesday, I am interested in Chewy to see how they are doing. We started leaps in those about a year and a half ago. I did close them, and I believe Chewy's doing pretty well. So I just want to like catch up with them, see how their charts are looking. And then we have Oracle, Victoria's Secrets, Vera Bradley. All of these I definitely like. I would need to take a look at the charts and see if anything is there. Adobe, Restoration Hardware, we have our H there, and that's pretty much it. So things are kind of slowing down. They're going to get quiet, and then we're going to gear right back up for financials, right? Banks are going to be around the corner, and of course, we'll be paying attention to them. And anytime we start to slow down in earnings, and we're looking for, financials to come, this is a really good time to start looking at those charts like Goldman Sachs, JPM, maybe C, uh, Bank of America, and so forth. So bring that up in the room if you guys are interested, okay? And another thing I'm going to do is for anyone that's watching us that's brand new and thinking about coming to visit us over at Simpler, the trial is only $7 for like 30 days. And I'm going to go over what you can expect here in the room, how our, the interface looks, and just how simple it can be to hang out with us here and see some really good content. The next thing that I'm going to be looking at is SPY, the bigger picture. So let me move this out of the way. We're going to bring up Thinkorswim really quickly. Okay, and let's bring in SPY here. And again, I like to look at the big picture because there's a lot of noise in the market. That's what I found over the years, and especially this year. And, I rely heavy on technicals. So when I'm looking at the market, one thing that we noticed, let's just read, last week's notes. This past week, bulls held the previous lows, but unable to make a new high. There are 29 days left in the quarter. Halfway point. Price above 586 means a possible three white soldiers on a yearly candle. Okay, on a yearly candle. And I showed you guys that last week, which is super exciting, but we still have 6 months to go. Price below 586 is an inside year. So that 586 is like a really big level for over under on the year. Okay. Price has, let's see. So support of the quarterly candle is 569 by 550. We really didn't have to worry about that this past week. We didn't come down. We didn't test any of that. So let's jump into this past week and see what happened here. The quarter candle is now over the upper yearly edge. And I want you guys to see that. There's a blue line right there. Now, this lower yearly edge is exactly where I started my tier two of a lot of my long-term trades and started to feel really good. It wasn't easy because this is like extreme fear down here, but this opens up the question, are we in extreme euphoria right now? Do you feel like it is? And if you do, then that's something that, we have to really, it's probably one of the hardest things, I think. I actually really love buying the dip, but when we get up to levels like this, it gets really difficult because you wonder, like, do you press the gas here? Do you pick a couple stocks and you just, really lay in? Or a lot of traders, including myself, a lot of times I actually get a little bit more worried here than I do down here, which is kind of, I don't know, I wouldn't say it's backwards, but I just feel like it's easier to buy the dip when everybody else is scared. And when extreme euphoria comes in, I have a really hard time. So I think while I'm sitting here talking to you about this, I think it's important not to get overly excited and buying too many things as we're approaching the all-time high, but perhaps maybe just concentrate on a few names that are really strong, right? And then put my allocation where I'm comfortable, maybe press my gas, in that area, but not all over the place, and just be careful and understand. And I'll talk more about that as we get to the smaller time frames, okay? So, this quarter candle now is over that edge, and this is a really, really big deal for me. Okay. Not only have we moved from the lower edge into the upper edge, this has been absolutely beautiful. Trendy methodology has worked very, very well. And so I'm excited about that. Now, over the upper YE, which is the yearly edge, and we have 22 days until this candle closes. So anything can happen. From a weekly perspective, price made a new higher high from its 3-week consolidation. I'll show you that here in a second. Price has pushed above the 88.7, and I'm looking for the 95% chance we break to all-time highs. Again, folks, timing is the variable. The two major levels for me are 586 and 613 for this week. 613 being that all-time high, and the 586, I'm taking the weekly gap, and I'm going to show you that really quick. So basically, I am placing my coefficients on the Fibonacci from this gap into the high, and that's how I came up with those two major levels. Speaking of, on the weekly, I wanted to show you this. We had 1, 2, 3, and I mean, really, it was almost an entire month. And then right towards the end of the week, we started to push up. There's a couple things that we can take from this chart, and I want to show it to you. One, we went from red to white to green. Things look great. We created an inside and up formation. We are above the YE, as I said before, but there's also this separation between price and the cloud. We know when we go back and study that price always comes back to the cloud. It's just a matter of time. So, this is definitely something that is on my mind, and I would encourage you to study this from the inception of the market. That means going all the way back. If you have these indicators, go all the way back to the very beginning and look how price reacts. So, yes, I'm taking note of this and understand that price could come back into this cloud. Now, very important, you need to understand how the cloud moves. Like, for example, if the market were to push to the upside, this cloud is actually going to extend to the upside as well. So, perhaps the cloud is getting closer to price. It doesn't just sit here, okay? So it will extend a little bit to the upside. So how do we get it to extend to the upside? Prices move up, or price will come down a little bit, pop back up, and this will cause it as it fluctuates to do something like this, and then it will find its support. So again, sideways movement, an extension up, and then a quick move down will get us back to the cloud. But I just wanted to bring that up so you understand. Also, when you're looking at shapes, it's been very obvious to us for a very long time now that we were creating inverted head and shoulders. Now, I don't know how you look at this, but perhaps price needs to come down here. It also lines up with support and then push up here, and then we could have an explosive move. I'm not saying we need to wait for it to come down there. I'm just pointing out a couple things that I'm seeing here on the charts. Now, let's talk about that 95% probability. This is a huge one. I need to see prices stay above this level for 3 weeks. That doesn't mean that I'm going to sit here on my butt and wait for another 2 weeks to see if this happens. What I'm going to do from the short term perspective is this is my big, or like, you need to really understand that this level is what is allowing me to feel those probabilities will will happen. Okay. If price is under this level, then I'm holding off, right? I'm cautious temporarily. Okay. So I'm also temporarily bullish as long as we're above this. So you could call this a over under. Now, at the beginning of the year, okay, I gave you a 2025 projection, and I'll show you guys that here pretty soon on the ES futures. But basically, it went like this, if you recall. We were above this level, and I said, listen, I'm bullish short term, okay? But I'm also very cautious because we were super extended and I felt as if we were going to pull back. And I was absolutely right. I didn't feel as if we were going to pull all the way back to this level, to be very honest with you, but it happened. We adjusted, and things are okay. Okay. So it's the same exact scenario. We're above it. That's bullish. Temporarily, though, like just understand we need to create a big base above here. Okay. Just want to make sure that I reiterate that over and over. Okay. So 613 again, that all-time high. This level here is 593. This is like my very close support, if you will. And then I gave you the major numbers for this week, which were down there at 586. That gives us a much wider area to understand since we're looking at the bigger picture and so forth to say, hey, I want to continue to stay bullish. Okay. All right. Let's go ahead now and move on to the Qs. And let's take a picture here at the quarterly candle. And guess what? It looks a lot like the other. And we're going to read last week's notes just so you can hear. The weekly closed as an inside and up. This is a confirmation of strength. However, price will need to get up and over the weekly and the yearly edge for continuation. The two major levels for this past week were 522 and 525. They're very close to each other. So we closed above both of those, exactly what I wanted to see. And if you remember last week, I was more bullish on the Qs than I was on the SPY. I love how the Qs tend to lead the market. So this is really a good um, instrument and or chart to look at and look for it to show us clues. Speaking of, Bitcoin has done something very special that I want to show you at the end of this, as we always finish with Bitcoin. But all of this is going to come together for you so you can see some of the probabilities, um, how they turn out, how Bitcoin may be suggesting exactly what we'll see over here in the market as well. Okay. This week's notes, the candle is over the upper yearly edge, UYE. As long as price stays above this blue level, just like the SPY, it's go time. Under this temporary caution, 22 days until the quarter candle closes. From a weekly perspective, price has made a new higher high from a 3-week consolidation, just like I showed you on the SPY. I'm looking for the 95% probability we see a new all-time high. The two major levels this week are 516 and the all-time high of 540.81. And again, folks, we closed at 529 with the aftermarket showing that we were up a tad. Let's go ahead and go over the chart. As I said before, this 9 EMA, you can see it here on the quarter, absolutely beautiful. We came down into the trendy edge, and from a Fibonacci perspective, looking at this low to this high, we came back to the golden pocket, and this was a beautiful buy. We talked about the golden pocket here recently on our Fibonacci class, okay? Let's go ahead and move on into a smaller time frame and show you what this looks like. So first of all, just like the SPY, I am anchoring my coefficients from the gap itself into the high. Notice that those major levels I'm giving you are around that Fibonacci 38.2, which is aligned with the inside and up formation, but also it is the 38.2, which we know is a very strong level for Fibonacci's. Matter of fact, the gap itself, what I'm saying is it's a very strong buy for me as long as price is staying above 516, okay? Other things that you'll notice here is that we also went from the red to white to green. I talked about that last week, whereas the SPY just did that this week. So I was more bullish here, and now I'm really bullish because we're above this level here. And as I said, we made a new higher high over that 3-week consolidation. But just like the SPY, I would like to see at least 2 more weeks above this level. Now, you might be asking yourself, why 2 weeks? Well, one, it's a very large level, meaning it comes from a high time frame. Okay. And what I'd like to see, this is this past week, we got above it. A lot of times what will happen, we could extend higher, but I just want to see that we can base above this. Whether we come all the way back and touch that this week, and then the next week do something like this, I want to see if we create the inside enough formation above that blue line. It doesn't have to come back though, please understand that. And the reason why I say it doesn't have to come back is because we spent time here in the beginning of the year. It would be different if this was a fresh level and price had never been there. Then I would say, hey, listen, the probabilities are that even if we were to extend up here, I'm always in the back of my head looking for that pullback into the edge. What was resistance becomes support. Do we know if it's support yet? In this case, over here, it shows that we could support it. Here, we don't know yet, and therefore, I'd like to see 2 more weeks on this chart. Okay, so once again, this is your cues. You guys can see we have a high up here. We can see that the yearly edge worked really well. And just like the SPY, we also have an extension above the cloud. Price has not come back to this cloud as of yet. Okay. Let's go ahead and move on. Our next chart we'll be looking at is going to be the dollar. So over here in Thinkorswim, let's go ahead, $ DXY. All right, so the chart here has not changed. It looks exactly the same. I mean, of course, there's been a couple more candles. This zone in here, buy zone, has been working. And you can see that it's holding the dollar up as of right now. Not any major changes. So once again, my two major levels, 102.7 and 97.95. Still expecting the lower zone if we break below 97. So I'm looking for 96 by 94, but understand that since we are at a buy zone, that the dollar could get strong and find some legs and move all the way up here towards 102.5. Okay, so that is the dollar. Let's go ahead and move on to the 10-year treasury. The 10-year treasury, I'm going to use TradingView, and that's going to be the TNX right here. And you guys can see we're using a weekly. And again, not much of a change here. These two opposing zones have been working really well. So I'll just leave you with this again. The major level for me is if we start to see above 5.005, then I'll be concerned. Basically, we're taking out this high. It could be working up here towards 5.92. So, how does this relate to you? The yield on the 10-year treasury is a key indicator of market expectations for interest rates and economic conditions. When the yield rises, it reflects higher rates. When it falls, it reflects lower rates. Okay? So, again, maybe you're thinking, hey, I want to be in TLT and so forth. This is a good indication of what's going on over there. Let's go to the skew. I love the skew, and again, I use TradingView for this. But I had this and I used to show this to you guys a lot, and then I started using Thinkorswim. You can actually come over here and use the skew on Thinkorswim. And because I use Thinkorswim primarily, I went ahead and put it over here. Last week, I talked about short term, seeing that we could see more movement to the upside, which we did. So you'll notice that I have these green lines on here. These are not by any means any financial advice. I'm just saying when price gets here, I'm interested in risk on at least 5 days. Okay. If for some reason the skew were to come all the way back to around 117, 120, somewhere in there, I'm starting to look like 30 plus days. And honestly, it's more like 60 to 90 because when prices hit down here, which they have not in over like 2 years, that people are extremely fearful and the sentiment takes a while for things to start working. So I like to buy a lot more time if the skew ever gets down there. So how do you use this in your trading? It might use the skew index to adjust your portfolio. If the skew is high, one might consider buying protective options, insurance, puts, right? Or maybe just reducing exposure. Conversely, a low skew might indicate complacency in the market or lower perceived risk, prompting a different strategy to the upside. Okay. So remember, while the skew is a useful tool for gauging market sentiment and potential risk, it's just one of many indicators that I'm using here. Okay. And this is why I do this video so that you can see how everything's coming together. So, for example, what I'm trying to say is that looking at the probabilities and my charts, I'm bullish. And then I come over here and I see that the skew is really, at least for the last 2 years, when it's up here, that means the market's really stretched. There's a lot of money to the call side. And this is where, people are like, they can't do anything wrong, right? They're the best traders in the world. We are sitting right now on the skew here that tells me that we're not really extended to a extreme greedy side. And so the market does have potential to play out that probability that I talked about. All right. So again, not really concerned about the market at this time as I continue to stay bullish. Okay. Again, guys, these are just indicators that I like to use, and I hope that they can help you. Let's go ahead and move on. We're going to take a look at the Fear and Greed Index, and I'll just pull down the room here so you can see that if you've never seen it before. And it's really straightforward. We were just talking about fear and greed, right? So the market, I'm looking for a move up, and everything's kind of pointing that it could happen. I'm not saying it's going to happen. I'm very flexible as a trader. It's, in my opinion, not very smart for traders to get overly biased because you can blow your account doing so. But the fear and greed is showing that we're sitting here at 63. Last week, it was at 62. Okay, so it's only went up a notch. You guys aren't that greedy. I'm not that greedy. But there's still room for us to get extremely greedy, which means in order for the market to get extremely greedy, the market must go up. Okay, so there is room for the market to go up. All right. All right, so that's what we got on the fear and greed index. Everything's kind of lining up to say that we could melt up a little bit into Monday and Tuesday, and then things might slow down towards Wednesday and Thursday, and we'll decide from there if we get follow through or not. Okay. This is one of my favorite parts, and that's getting to the futures because I've always said that the futures show you the future. And I really mean that. If you didn't know, every single morning here in our room at Simpler Trading, we do futures trading. All right. I love doing this for at least 30 minutes at a minimum, sometimes an hour of trading the ES futures, and we go over the NASDAQ futures as well. We do what's called intraday setups. So we know exactly where we want to get long, where we want to take profits, and so forth. But what I want to show you is a top down approach every single Sunday. And just like the SPY, they do look a lot alike. I get that. But believe it or not, as far as technicals or the indicators on the chart, things could be just a tad off. That's what happens when we do, say, ES contract rollovers and so forth. So please take note of that. Okay. All right. So over here, you'll notice that we've went from red to white to green. Also have this little green arrow starting to poke up here, so that's a good thing. Usually when we go back and we study the green arrows, you'll see that price almost always leads to further up. I said almost always, not all the time. It's not bulletproof. Okay. When I look up and to the left, obviously we can see where the highs are. And just like the SPY, we are above the trendy edge, but only 10 points above it. So please understand that. So again, this would be your over under for the week, but I like this foundation that we've created, or you could say this structure in here. And it does look like we want to move further up. Okay. There are some extension targets to the right-hand side using Fibonacci's. These would be a little bit longer dated, but these are potential targets that we could move to in 2025. Speaking of, I talked about the 2025 projection. Let's go ahead and take a look at it and see what it looks like. All right, so we're going to go from the weekly. Let's go to the quarterly, and we're going to go to 2025 projection. We just want to see how things are going this year. All right, there we are. So we had a little bit of demand down here that we were interested in. Price never quite got there, but my indicator was there, and that really helped us. So prices came down into the indicator and therefore really helped with like understanding where we wanted to get long. Okay. Now notice that we are at the monthly inside and down. We're at the trendy edge. So this is an area where I talked about before. Yes, I'm bullish, but I'm also noticing that we need some more time above here to create a base. This is your quarterly candle. It looks beautiful. Things are going well. Let's go into the daily. The daily, I have triggers. I have buy triggers, I have resistance, short triggers. And as a reminder, they're placed at levels like Fibonacci's, structure, It could be a 200 SMA, something like that. But at the end of the day, these are just triggers that allow me to understand that we're at an area where I may be interested in getting long or short if I'm not already. These are not blind triggers. I go and I look at a little bit smaller time frame, make sure things are setting up, and then I'll take the trade if needed. Okay? Take a look at these, see if they match up with any of your levels, and if you like them, cool, you can put them on your chart as well. Let's go ahead and go into the 4 hour. Again, working our way from the top. You can see here we had a nice formation inside and up over the trendy edge. We're moving to the upside. We got over this pivot point here. Our new level for this week for support is around this 59.5 and a little bit lower. Up above, you'll notice that I have levels. If you look to your left, I'm just picking out some pivot points here to find levels where price could stall. So if I'm long, say I'm long the SPX or something like that, I can look at trimming and so forth as we move further up. Okay. Remember, every 10 points in the ES futures equals $1 in the SPY. Let's go ahead and move on to the NASDAQ and take a look from the top down as well. All right, so from the top down, this is your weekly and looks beautiful, just like the ES futures. We've went from red to green, got a little green arrow here. And once again, if you go back and you study the green arrows, in most cases, the market continues to push up, especially when the market is already above the cloud. Sometimes you'll get different results, for example, if we're getting a green arrow and we're underneath the cloud, but you can see almost almost all of these have push price to the upside. So we're really sitting nicely um, at our probabilities, suggesting that we'll see higher. Now, I do want to note, as you get here to the high, notice this green arrow, right? And then boom, we start to see these blue turn signals. This is letting me know that there's compression and that we could see a down move. So that's hard. It's hard to take these signals when you're so, euphoric and sitting up here at the top. This is what I'm talking about. And that's kind of how I feel where we are. But again, we're not quite there. We're not getting any signs to say, hey, we need to get short or anything like that. Okay. Let's go ahead and look at the daily. Same thing. Triggers, if you like them, cool. You can put them on your chart. We have a resistance. We have some buy triggers if price were to pull down. And then I have a short trigger. Let me go ahead and reiterate this. I'm not looking to get short. If I were to get short here, it could be as fast as 10 minutes, 30 minutes, a half a day. I don't know. It's just that when we get there, I look on my smaller time frames and look to see if there's anything that is suggesting I should get short. The next level we're going to look at is, or time frame, sorry, is going to be the 4 hour. Once again, nice formation here above the trendy edge. Again, we're not too extended above that trendy edge. Therefore, I am a little bit cautious. Need to see more time above here. I'm obviously net long in my portfolio um, with a little bit of protection that I sent out on SPX, but I'm also long SPX. The longer dated protection is for Friday on SPX, and then I'm already long SPX short term. Okay. All right. So this one suggests that we have support at 21,570 by 21,407. And then we have levels just like on the last chart. It would just look left. We can look at some of these pivots and highs and use these levels here. These are the ones I came up with. I'm sure if you have targets, you're probably pretty close to mine as well. Okay. Lastly, I want to talk about my sentiment just to reiterate. Then we'll go to Bitcoin. All right, and I want to show you something on Bitcoin that's really important going into this week, so I can show you that 95% probability. Okay, but before we get there, again, just want to reiterate that we're towards the all-time highs. It's super exciting because since February, guys, it's gotten kind of nasty, and then it was hard for a lot of traders to get long down there. But man, has it been a really fun ride. And I just want to say thank you for being here with us. And thank you for being a part of the Trendy Room. And if you're not, and you're just a YouTube subscriber, I really appreciate you as well. Okay. Let's go ahead and move on to Bitcoin. All right. So, first things first, short term, I'm in this long term. Okay. And I just add on dips and stuff like that and like actual Bitcoin. All right. But short term, if you're interested, if you understand the ACDC concept, which I'm sure if you're a member, you know what that means. I'm looking for a pushback up here to 111 as long as this blue line holds, which is around, just over 100,000. Okay, that's short term. Let's look at the bigger picture though. Couple things here that I want to talk about. Inside and up formation, 22 days until this candle closes. Everything's looking really good. Price came back into this level. It's holding. That's awesome. We're happy. Things look good. My 2025 projection, 138 to 167. Cool. All right. But what I wanted to show you was right here. So we're talking about that probability, right? And so when you look at this is a lot like, remember I said the Bitcoin could be showing you what we could see in the market. I'm not saying Bitcoin leads the market at all. It's just the chart really resonates with me, and I think it's a good teaching tool. We had made a high, okay? And when we come in here and we look at this high, okay, and we measure down to the low, you can see that 88.7 was here. Okay. Once we broke above here, what I'm looking for again is a 95% probability we hit that high. Timing is the variable. Sorry, I should say that again. Once we got over the 88.7, I was looking for an all-time high, not the high. And notice how we do make a new all-time high, but what my practice is and just going back and looking, the high is typically not very big. It just, all I'm saying, a new high. It could be a penny, you know. You got to be really careful in here because this is where it gets super euphoric. And with my time in the market, what I always remember is when we make highs, man, people just start jumping in, man. And I always think to myself is like, why are we not jumping in at the lower levels? Like this year, right? This is where I added down here. Why are we not jumping in here? Right? So I rather jump in here, trim if that is my plan instead of getting uber bullish at the top. Now, there is a such thing as called breakout and momentum. John Carter just did his webinar on momentum, which I think you could really use that about this time because we will probably see Momo, as traders call it, around this area. But always for me, I'll tell you, from a momentum standpoint, I'm probably having fun for a day or two, but I'm also in the one eye open. I'm looking down for protection. Okay. But you'll see that it did work out. It only took a week and a half, maybe 2 weeks to make that all-time high. There's different results for different names and so forth, but this is what we could be seeing in the overall market if we get that 95% probability, suggest we make a high. And then from that high, folks, for me, I'm just being cautious, being protective, but I'm sure we'll be, breaking and going right into financials. So just to give you an idea, let's pull up JPM. Okay, and again, we're sitting here at June 8th. Let's look at their next earnings. And as I said, earnings are getting a little light and a little slow and boring. So we want to come over here and you'll notice that our next earnings cycle, when things start speeding up, is going to be around July 15th. So we're sitting about a month out from there. Things will be a little quiet. I'll see, we'll see if we get that melt up or if we're going to get the pullback to maybe complete that inverted head and shoulders. Either way, folks, always understand what your allocation is and what your plan is before you take the trade. Have those stops in place, have your triggers in place. Don't be afraid. Execute what you believe in. And if you're a technical trader, concentrate on technicals. Okay. If your chart's not broken, then no reason to fix it. Stick with the plan. You already said, hey, I want to be in this trade. Stick to it. Don't be the trader that I was when I first started and get scared and then go back. I get stopped out and then go back and look and go, man, the chart never broke. Why the hell did I get out? Right? That's me. Now I stick to sticking with my plan. All right. So please, please do so. We'll see you guys tomorrow morning, 30 minutes before the market opens. And right before that, if you want to stick around, if you're brand new, I want to go over this with you. This is the Simpler Trading platform. All the rooms look like this. We have several rooms here at Simpler Trading with different traders, a lot of great traders that I look up to, and the platform looks the same, and I love it because it's simplistic. Now, a long time ago, I had a Discord room, and every once in a while, you guys will see me flash Discord alerts and stuff, but we don't have like members there. We have it's for Melissa and I to hold. It's like a holding ground for all of our alerts because we have API alerts. And API alerts means as soon as we take a trade, you get to see what we're trading, right? It comes straight from our account. And what's really neat about it is it's super transparent, and I think it's important to be transparent. This is from a real account. API, there's no such thing as API on a paper trade account with Thinkorswim. So you're getting to see exactly what Melissa and I trade. They're very easy to understand. You can come in here and click right there. She's going to give you her notes on certain trades and so forth. The other room that I have is SPX, and I'll show you that here in a second. But this is going to be like your chat area. This is just where all of our members hang out and chat. Off topic is if you got off topic stuff you want to talk about and so forth. And then over here on the right hand side is really cool. In the morning, we can share I share up to 4 screens at once. Melissa's typically got one on. So you can pick and choose what screens you want to look at. When I'm teaching, we select the right screen so that when it's recorded, you can go back if you're like busy at work or something and watch that. A lot of good information in here. Now, far as you as a member, so say you want to come in on a trial, you want to be concentrating in here. Every morning I'm going to give you the very straightforward what I'm looking at. If I'm bullish, so forth, where buyers are looking to come in or we're sellers and all that good stuff. And then right now I'm doing the BMA, which is the broad market analysis. I update that and everything is in there. And traders can come in here and check out the stuff that I just talked about. And then we have educational videos. If you're new to Trendy, these are Melissa's trade notes. She goes over everything here. You can see her beautiful P&L, things moving from the left to the right. Things look great here. I talk about API alerts here so you guys can see what that looks like and what that means. Again, I think it's the best thing for transparency. It's awesome. And then here's my trendy performance and open positions as well. And if you guys are interested in that stuff, you can come over here and check that out as well. And these are my positions. It looks like I have a lot on, but I also have a lot of leap trades, and I have like spreads on some trades, so it looks a little bit more extended. One thing that I did add this week, and I will keep up with this, is giving you the chart that I'm actually taking trades on so that if you have any questions, they're all going to be right here. Now, you also have our indicators that are explained. You're welcome. 2025 outlook with all of the charts that I did at the beginning of the year so that we understand where we're looking for prices to push and or where buyers to come in and all that good stuff. And then here was our workshop schedule. So we had 12 classes that we did. I just finished my last one, and I believe Melissa's is coming up this weekend. How to grow a small account, tips and tricks that have helped her double her 5,000 accounts 7 times in 2.5 years. So again, I think this is a really good one for small account traders. So make sure you get in there and check that stuff out. Now let me go ahead and show you the SPX room and go a little bit more over the kind of like the platform and what it looks like. Give me 1 second here, and we'll pull this down. All right, same thing. You're going to see it's the same exact. Um, here is the trades, and this is a great example of our API alerts, which I just absolutely love. You guys can see here, I open up butterflies on Friday. It tells you exactly how many, how much it was, and these ended up closing perfectly. I think there's close to 1,000% by the end of the day, which was pretty awesome. Here's that trade that I legged into for Friday. And this is just a hedge, pretty small trade. You guys can also see that here. Now, one thing I like to do is also give updates. So you can come in here, or if you have a question, you can always, just ask right here and it'll flash on my side. And then I just click it and go, okay, cool. And then I answer you in here. Um, yeah, so that's pretty neat as well. And if you have any questions, just let us know. And once again, guys, it's $7 for 30 days. You can come over here to Simpler and really get a lot of great information. As I said, there's a lot of different masteries and so forth that are offered here. And we look forward to seeing you, and I hope you have an amazing Sunday. I can't wait to trade with you. Be ready 30 minutes before the market opens so that you can hear our morning trend update. See you soon.